Thank you everyone for joining us this bright and early morning. My name is Augie. As mentioned, I'm an investment partner with CMT Digital. CMT is a 28-year-old trading and investment firm based out of the US. And it is my immense pleasure to be moderating this panel along with our esteemed panelists. Maybe to start, just to give everyone a sense, would be great if each of you could introduce yourselves and your firm. I think one of the things that's very special about this panel here is we have a mix of different models on stage: global, regional, venture, prop. And so it would be great if you could spend a little bit of time talking about what is your specific model and how do you see your edge in today's very competitive landscape. Alan?
All right. Hey guys, my name is Alan. I'm the founder of EVG. We founded the firm in beginning of 2019. Before that, I was in private equity running TMT strategies. We really not a fund by definition. So, but we do invest a lot in venture, from both as a venture builder and also as a venture investor. Over this year, we have put over 100 million of our balance sheet capital into the R&B side of thing, and we've two different vehicle and subsidiaries deployed about $400 million into minority deals and strategic deals. Yeah, and EVG is a group together currently combined for 70 people globally in 7 offices of operation. We own one of the biggest media in Asia. We own fintech firm. We own an AI lab, a gaming lab, as well as this year we launched a new product called T-Rex. Yeah.
Hi, everyone. It's great to be here. I'm a proud Singaporean, so this is always my favorite conference. My name is Min, and I'm the co-founder and managing partner of Ethereal Ventures. Ethereal is a global investment firm that's focused on crypto startups. So we invest in pre-seed and seed, basically day one partners to the best founders globally. We help them reach their first milestones, be it in product and, first customers, their first hires, and, help them groom them into being successful companies that can scale. The team has been working together since 2018. We were the former investment team of Consensus. So we've been successful in incubating many of the seminal products in Web3. And I would say our edge, we're a standalone fund, so we have external LPs that are, global between sort of US and Europe and Asia, is we have the experience in working with founders and helping them reach those first milestones, also work with the best investors, not just us, but also people who do the Series A, Series B, the TGE, and also, eventual sort of liquid funds who can help them on their token journeys. And we're really focused on teams who are, pushing the envelope in terms of innovation. So some of our portfolio companies include EigenLayer, Aztec Protocol, Spruce Network, and many more. We have about 80 companies in our portfolio at the moment.
Hi everyone, Faisal here from Further Ventures. We're a VC fund based out of Abu Dhabi, and we invest globally. The thematic focus of the fund is the future of finance and capital markets. So we launched in 2022, and from the beginning till 25, our focus and edge has been around incubation, similar to what Alan said. However, we focused on a segment of the market, which is regulated finance. We thought for this period of time, what made sense is to focus on financial solutions that could step into the market and fill gaps, whether they're areas in lending or wealth management or building payment trails using stablecoins. So that's where we saw there being an edge of the market, is how do you build those regulated businesses that could scale fast, and that has been a good approach so far. Now, looking into the future, the next kind of vintage, as we're launching our second fund, we're looking at areas such as tooling for capital markets, focusing on areas like collateral management and mobility, 24/7 and 24/7 trading. We're thinking, how can we enable traders and institutions to be able to optimize their treasuries and the way they trade.
Awesome. Well, now that we know a little bit about each of you and how you position your firm, let's talk about what are the specific opportunities and trends that you're seeing in your markets. Because all of you invest globally, but I think your home bases are different. And I think for crypto, there are trends obviously that are intrinsically global. Trading platforms, RWA are things that we see across the globe, but there's also some opportunities or trends that I would argue are specifically local. And so I'm very curious to hear from our panelists, what's one trend in your respective markets that maybe global peers are missing and that you're excited about?
Oh, okay. I think obviously I'm based in Asia. Majority of firm are based in Asia. I'm not sure if you guys see this clip that Eric Smith was just on the stage with Shamath, probably like a few weeks ago, comparing about the tech between the AI trend and AGI between China and US. And one thing he said is like super interesting. What he mentioned is that when America is pouring, hundreds of billions of dollars into tracing, making AGI happen in the next maybe 3 to 5 years, China, because the lack of risk capital in the side. So let me give you a statistic. Last year, $110 billion was deployed into AI in America. In China, combined, that's $14 billion. So it's almost like a 10-time differences, right? So, and despite being the second largest market in the world, so all the companies in China are forced to focus more on applications and taking into everyday usage and life and utility. And so that's why you're seeing they're winning in robotics, they're winning in a lot of daily applications. And like I think the same trend is pretty much happening across Web3 as well. If you think about every single entry point application you're using, regardless it's Binance, MEXC, or a lot of product that actually touch people's face on a consumer perspective, actual retail owner, actual retail trading vaults, I would say Asia is pretty much dominating, right? If you're a project, you're doing attack Greater China well, you're doing attack Korean well, you're gonna lose 70% of trading volume, right? Because Coinbase and Kraken, as much as love them and they're my partners for different business, I'm not gonna give you flows as an altcoin, right? And so, the second thing most important is remember is the cost structure. That's why we base most like our 200 engineers here in Asia. A 10-year-old experienced engineer in America worked in Amazon or Facebook or Meta, all these companies, will cost you probably about $400,000 to $500,000 a year in base, and plus maybe $250,000 in ESOP, and then refresher in year 2, whatever on top of that. And half of my team is from Tencent, Alibaba, TikTok, and all these firms. And they cost me probably about $120K a year in annual. And they work, they can work Saturday. I just make them work like 11 Huangjinzhou, which is like the big national holiday. Make them work 3 days out of 7 days. And
996, is it?
yeah, they respond. So that's why he explained to you, like, for a lot of business model where cost is important, you want to, as an investor, as a builder, we want to make sure the budget, the money you raise, actually have the highest capital efficiency and ROI on those specific venues. I think Asia will have a huge advantage. Obviously, for stablecoin, for more institutional adoption, no one gives a shit about how, like Hong Kong regulator has to say. Everyone's eyeballs in DC, everyone's eyeball is what Wall Street does. So I think for certain business, America has advantage, the Western world has advantage, and for a certain business, I think Asia was immense advantage. I think even the founder themselves don't even know.
Yeah, so for Ethereal Ventures, we have a global mandate, but I would say most of the portfolio is in the US, and we also tend to focus more on the US. The regulatory changes and clarity that we've seen in 2025 has been hugely advantageous for the industry. I think on the basic level, founders aren't afraid to go to jail. They're not afraid of, getting sued to build, crypto startups. So we have a lot of founders who actually moved away from the US, now moving back to the US, building teams in the US. I think we see two main categories emerging. So, undoubtedly, I think the two areas that crypto really has product market fit is DeFi and payments. So, with regards to stablecoins, as like Alan mentioned, I think a lot of people are trying to figure out like how do they sort of wedge in by moving the existing payment stack onto stablecoins and crypto rails. Now that you have more clarity with Genius and also the upcoming Clarity Act, you also have big players like Robinhood, Revolut, Stripe, really pushing merchant payments. A lot of startups are trying to figure out how do I fit into that value chain because there's a phase shift happening. And when that happens, there's money to be made. I think the second trend is on the DeFi side. There's a lot of liquidity in Asia, but a lot of the capital markets frameworks are still in the West. So at the moment, there's sort of a bit of a mismatch with like institutional capital coming on chain. But there's a huge opportunity as you try to advance these DeFi protocols to fit the needs of not only more sophisticated traders, but eventually also institutional players. So that's like, again, the product of more institutional acceptance, more regulatory clarity, more founders trying to solve difficult problems here.
So we all know that crypto has less geographic friction. It's a global kind of business, so forth. However, there is a segment of the market where we believe that regional companies can compete. And this is especially with regards to businesses that are regulated. So, for example, in stablecoin payments or trading venues, we believe that there are companies, like for example, there will be a BVVNK in each region. We see that happening. So that's why for us, the focus has been on building businesses that are regulated. And what I think global players that want to come to the region, what they often try to do and sometimes miss is figure out what's their best way to enter these markets. Typically, they would often to get licensed directly, and often they learn that it's better to work with partners for distribution. And we see this time and time again, where you have global players who want to enter the Middle East, and they come in with their budgets, the capitals, and team, and have a very difficult time to be able to integrate with the ecosystem. And hence, we try to build close relationships with those entities and to see how can we collaborate when it comes to distribution.
Makes sense. So you've heard perspectives, from China, from the U.S., from the Middle East. I think it would behoove us, given this panel is about the globe, to talk about the rest of the globe, which, for the sake of this next question, I'll broadly classify as emerging markets. I think each of you have a unique vantage point into emerging markets, either because of your heritage, where you're based, or your investment footprint. And I want to start this question with a quote from Jeffrey Pichet. He's the former group CIO of GIC, which is the sovereign wealth fund of Singapore. And he noted that emerging markets have delivered 5 to 7% economic growth for decades, but, quote, terrible capital markets performance since 2007. And every cycle, we hear about the promise of emerging markets in places like Africa, Southeast Asia, Latin America, yet returns often lag the narrative. And I would argue we've seen a little bit of that also in crypto venture, where we were promised parallel financial rails to bank the unbanked, and we received meme coins instead. And so I guess the specific question for you is, when it comes to emerging markets, what do you believe is holding these regions back? And what specific catalysts will finally help returns catch up to the narrative?
Wow, that's a good question. What's holding this region back? I kind of try to think like capital market is. I think when you think about capital market participants, I think this has come from one of my mentor who has done like 200 plus IPOs, and he said this famous quote is like, when you think about capital market participants, think 90% of them are monkeys and idiots. And I think it's like there's a certain level of truth to it. People often tie capital market performance or price performance to direct fundamentals, or like what actually use that to exactly measure a country's growth. And I think what Jeff is trying to segregate is, if you look at the fundamental growth in the capital market, they could be derailed, right? And I think similarly thing has happened obviously in crypto for a longest period of time. And the reason I think a certain market perform better a lot of time has nothing to do with its founder quality being better, project idea being more brilliant, or the product being more competitive, or wider distribution. Is only because it marked up more because maybe a certain country's advantage in the more developed the system across the value chain in terms of the capital market machine. US being an amazing great example of that, right? Like if you're a great talent today in Silicon Valley with AI PhD from Stanford, you're probably able to raise money pretty easily at a pretty high valuation. A lot of people throwing money at you. And then if a friend is Series A to market up at Series B, and the whole value chain is really well established all the way through the public market. And that's why you saw all these DATs happening in America in the financial engineering, largely because two things: the depth of liquidity there, and also the listing rule are really relaxed, right? Like I used to own public company in Hong Kong. The rule there is really strict, right? And if you apply the same thing in terms of crypto, company, you're seeing the same thing. As a founder myself, who put money in R&D, who build product, who also have investor from other people and also invest in other people. If you look at fundamentally, I think APAC, we one of the biggest problem is we don't have any sizable fund here. Really anything. I think in America or Europe, I can probably anywhere name drop probably about 1 billion AUM fund. In Asia, good luck naming maybe 2. It's very, very difficult. And also, I think as a founder, you saw the Series A and B are now very, very broken right now in our industry. We got a lot of capital they're willing to angel you or raise the pre-seed at 5 million, 6 million valuation, try to get in there cheap with their portfolio management strategy. We got some people that would buy your liquids and do OTC with you in the much later stage. And then if you're trying to raise like $20 million right now, I think even for more proven founder like me and my peers, is not something like super easy today because nobody want to underwrite their so-called in their word mid-curve check, right? So I think going back to the Jeff concept, I think a lot of time is it really to do with the project fundamental, or is it really to do with a lot of other reasons that really affected that? And obviously, you kind of try to see this as a swing where the equilibrium, hopefully, someday will swing back to a more measured outcome. But I think that's the phenomenon that's happening not just in Web3 but also Web2.
Yeah, I think this is such an interesting point because it really it underscores the importance of crypto. I mean, ultimately, it's a matter of investor trust, right? And the problem that emerging markets has is that, they just don't have investor trust in general to have functioning capital market systems. I think, their independent sort of local and regional financial regimes have been unstable for a variety of factors, either inept governments, like, rampant inflation, what have you. And as such, like, I think a lot of people just haven't had access to proper financial products that really underpin the foundation of a stable financial risk regime, where if your own citizens don't want to, keep their savings in your own local currency, like, how do you expect overseas people to do the same? So, I also think if you're a really smart founder in emerging markets, like, Southeast Asia has a lot of promise, but the challenges, for example, are your average transaction value is about 10% of what you see in Europe and the US. And secondly, each individual economy is relatively small compared to like the addressable markets elsewhere. And you have to localize, your user experience to each one. And, you kind of see like, it's very difficult to create a strong regional player and, really roll that out quickly. Whereas if you do something in the US, you have a captive audience of like 300 million people really quickly. So crypto is really important because I think it gives a lot of people in these emerging markets economies a way to actually protect their savings, protect against inflation. But it also gives founders who are like really bright people, and that's really what Ethereal looks for, bright founders in India and Bangkok and like Latam and Africa, what have you, who want to build global products. Because the beauty of crypto is that it's software that just transcends borders. It's permissionless. You don't need to rely on any sort of specific government. You can actually just sell to the entire world from day one. And that's really interesting. And I think where you have founders who have that global ambition, crypto is the perfect like launch pad for a lot of their visions to create like really great financial products for everyone.
In terms of the Middle East, broadly, yes, it is a big market. However, I think where we see growth is in specific pockets of the Middle East, and those tend to be the smaller countries. Hence, a lot of founders find it difficult to scale their businesses. And I also think there's element of there's also the element of political unrest in some of the large markets, which kind of limits the amount of liquidity and interest from global players to participate in those markets. Bringing it to crypto, I think that in segments like payments and stablecoins, in large markets like Turkey and Egypt, we've seen a lot of traction there, and I think that crypto has fulfilled this promise to a certain extent when it comes to holding stablecoins to hedge for currency risk, for example. We've seen this play out quite well in these markets. what probably slowed it down a bit is the regulations. So in those big markets, regulations haven't progressed as fast as we'd like them to. But I think as regulations catch up in those large markets, we will see more adoption and interest and liquidity.
Makes sense. Great. The paradox in emerging markets that our panelists just walked us through, strong growth but weak returns, I think is just one example of the broader challenges facing venture as an asset class, which I'd love to spend a bit of time talking with you guys about, right? So it may not be apparent to everyone in the audience, but I'm sure this is something that our panelists feel viscerally. Um, Venture has a lot of challenges today. A stalled IPO market, capital generally being commoditized, and competition and intense competition from the mega platforms. All of which I think brings about the question: how does the venture model itself need to adapt in the face of these changes? We are, for what it's worth, already seeing some adaptations today. For example, funds that were traditionally venture moving into liquid strategies and selling secondaries in order to meet LP liquidity needs. But moving ahead, the question: how do you see venture evolving, and what changes are you making to your funds specifically?
Do you want to go first, since you guys have LP money?
Yeah, I think it's the core piece that I think Augie also alluded to is that we strongly believe that liquidity in crypto is a feature, not a bug. And so, because of this, traditionally in venture, you just have hybrid private investments. You don't really have to think about tokens or liquid securities very much. In crypto, you have to think about it from day one. To the extent a lot of your companies are hoping to monetize or build communities utilizing tokens. A token kind of has to fit in the protocol from day one. You can't just attach it on later. I think these days retailers and investors are very sophisticated. They really want to see token utility and a really good velocity sinks for the token across DeFi, for example. That's definitely one of it. I think the other thing with venture is um, in some ways, crypto, because of a lot of the principles of decentralization, I continue to think that one of the more interesting value propositions of crypto is the ability for permissionless capital formation. To some extent, they don't really need me, right? Like if you can ICO, and I think a lot of those are coming back, we're seeing many of the big players start launching regulated ICO platforms. You also have sort of, investment club type platforms like Echo and Legion that anyone can participate in. Oftentimes, even like more favorable terms than venture capitalists. So I think it's really on us to develop playbooks for founders to really help them as they build their business so that, there is value from taking money from a venture fund as opposed to just launching an ICO. And I think it just helps the entire space level up because now, crypto VC has been an asset class for, I think, properly for around 8 years now. And, as the space keeps changing, we also need to adapt. But I think there are a few things that sort of persist through the various cycles that we know to be true that we can observe with the projects that have succeeded versus the ones that don't. And, hopefully the industry becomes stronger from all those insights too.
Yeah, so there are two ways that we're thinking about how can the firm evolve over time. So from our side, one is touching on the element of liquidity. We as a VC fund want to focus on what we do best, which is venture investing. But in crypto, obviously, liquidity is important to LPs and team and so forth. And also, we think that Bitcoin is often the first entry point for people in crypto. So a lot of the LPs from our side, they want access to Bitcoin yield. Hence, that's why we created a side pocket for investors who want to own a Bitcoin position and get yield on it. That's one way that we have adopted. We don't claim to be traders. We're not gonna launch a liquid fund and trade. But we did think it makes sense to create a side pocket for Bitcoin yield, for example. Again, because that's how people generally enter the space, and that's how they do more crypto. Second thing is from our side, our edge has been focusing on B2B and being, the partners for distribution. And there, I mean, we haven't done this yet, but a thought that comes to mind often is how can we build an edge? And one way is if we are able to selectively play a role in like larger size deals, whether it's growth or PE, because that way we're able to align our interests with large partners for distribution, whether those are stablecoin companies or exchanges or trading venues. Having that alignment and connectivity towards those companies is important for our model. Hence, we thought about how do we participate selectively in those bigger transactions to allow for distribution.
Yeah. I think actually they already talk about a lot of the market. I think two things I want to just like add on top of that is I think we need to separate like what need to remain the same for venture for the years to come and what will probably inevitably change, right? And I think if you think about the venture nature, like the way I kind of think about venture is a product that require a lot of emotional belief and conviction, right? It was like the queens back in the days tasked some pirates and say, I will give you a ship, I'll give you 10 ships, I'll give you 200 people, I'll give you some money and go find me America. Or go find me India, and end up there finding America, right? And probably most of this ship down in the ocean. And it's the same thing that when Song-sang from SoftBank, a Japanese, came to China and say, I don't know what this Jack guy is talking about, but he might be right. And let me buy 20% of his company, give him $25 million. It's the same thing when a media company in Africa is from South Africa, Naspers, went to China and become the biggest shareholder of Tencent. And think about the nature of venture, it is irrational, right? Like fundamentally, because it is very almost impossible to replicate and grow the size of venture in a way that is exponential, right? Like everybody knows AUM is the biggest enemy of return to a certain degree, simply because you're relying on a small group of outliers to create outlier and impossible outcomes. And it is hard, and most of them are going to die in the harbor and by the time they weather the storm. And I think that need to change. We shouldn't try to turn venture, both as a founder and investor myself, like we shouldn't try to turn it into an ETF. We shouldn't try to turn it into asset management product or fixed income product. Go buy that with Goldman Sachs. Go buy that with Ares product. Get your 8%. Open a private bank account. But I think venture need to stay true to their colors so that it has a special place in this society and for an industry so imminent and nascent like crypto, because we need those pirates and we need these backers of the pirates. And I think what need to change is that I think most of the GPs, I would say, traditionally Web2, when I was a Web2 GP and I was a Web2 founder, I think like 70% of GP adds zero value or negative value. I think in crypto, the ratio goes to 90%. And what we have is, I think a lot of GP don't understand, a lot of this 26 years old kid who have never built a product in their life, who has probably just got lucky by, being a DJ, buying some meme coin early on, all of a sudden telling you how you should operate your business, you should do this, you should do that, there's a narrative you should be going afterwards, maybe you should add this tag and buzzwords. And that's funny because I think a lot of GP in our industry are not really qualified. And I'm not saying the founders are. Most of the founders are not too, right? So I think we need to see a lot more founders in GP really, like one of my favorite sayings from Clint Underwood is a man must know his limits, right? Stick to what you're good at, what's your core skill set, what's your core DNA. Like Faisal mentioned about enterprise, because there's larger what they have an advantage. For my group, we do almost like 90%, 95% things in consumer because that's what we're good at. So I think regardless of investor, founders, stick to what you're good at. And I think we're going to see a lot more specialty founder, specialty manager coming out of it instead of a lot more generic one that are undifferentiated. So I think that is probably going to inevitably happen. I think the LPs will probably adapt towards that way as well. LPs going to ask, like, why should I choose you to invest in this sector? Instead of like, yeah, you're a great guy.
Makes sense. We are unfortunately out of time, but I think we covered a lot of ground. Your firms, global trends, emerging markets, how venture is changing. So with that, let's wrap up this panel, and please join me with a big round of applause for our panelists. Thank you.
Thank you.